AI is checking the liveness. Through Aadhaar, we are pulling all the documents. Now KYC can be done anytime. No need to visit the branch. No need for anyone to come to your place.
So if you look at the circulars, it is starting from maybe from a 2017, 18, 20. You can see that there is a massive increase in terms of very specific micro level controls actually regulator want to put it, make it cost effective, like the disruption what Zerodha or Grow has done in terms of the discount dropping, do that particular thing.
So smart data scientists, 3 or 4 or 5 team of data scientists and data engineers can definitely crack this.
Entities on that, so that we can work together for that particular growth journey. So that's from our side.
Hello and welcome to CIO News. I am Khushbu Soni, the founder of CIO News. This is our very exclusive interview series on the topic of digital evolution of India's financial sector. It is a recorded session and will be available on our website, that is cionews.co.in, and our CIO News LinkedIn handle. I'm very excited to invite my guest for today. We have Sunny Shah, the founding member and senior vice president technology at indmoney.com. Sunny is responsible for the backend data science, data engineering, and DevOps at indmoney.com. Prior to joining indmoney, he was heading data engineering, analytics and science at GoIBigo. When COVID started, Sunny got an opportunity to volunteer to architect and build data-related solutions for Arogya Setu app, and that is pretty exciting, Sunny. We look forward to having you on this discussion. Thank you so much for agreeing to do this.
Thanks for having me.
Wonderful. I'm also accompanied by Asish Karunakaran, the Vice President and Head ISO Cloud at Tata Communications. Asish is responsible for expanding financial services offering across the globe at Tata Communications. And he's been engaged actively with industry leaders like the CIOs and the CTOs, aiding them in their digital transformation journey. Prior to Tata Communications, Asish was Chief Information Officer and heading technology department for various companies like ICICI Prudential Asset Management, Vital Healthcare, SBI Capital Markets, and many more. Pleasure to have you, Asish.
Hey, thanks, Khushbu, for that good introduction. Thanks for having me.
Wonderful. So to begin with, we're talking about the digital evolution of India's financial sector. So to begin with, Sunny, I wanted to put my first question. With the digital aggregation and the neo-banking, that has been disrupting the way financial services and products are sold in India and globally. So, how important do you think the role of technology plays in driving the fate of the industry today?
Yeah, sure. So, what technology does, in my opinion, is makes something very, very accessible. Like, for example, if you look at US stocks, when IND Money built US stocks, lots of middle income folks of our country started investing their money and diversifying their portfolio and started investing in US stocks. US stocks earlier only and only UHNI users used to do. So this particular service of investing in US stocks was only and only accessible and available to UHNI users. Similarly, if we look at what IND Money in Indian stocks did, what Zerodha did, what Grow did, is the brokerage that these platforms and we charge is significantly lower than what prior to this platforms came into existence, what other brokers used to charge. It used to be 5 to 10 times higher than what today's apps are charging. So what that does is it makes it very much accessible and inexpensive. The other thing is because it's available on your phone, accessibility is even higher. You can buy mutual funds, stocks, whenever you want. Like even let's say US stocks market is closed, IND Money allows you to place the order and when market opens, we'll place the order. That's what it has been doing in this space. Most importantly, the best part is, thanks to this new platforms, lots of users who would earlier only and only invest in fixed deposits, now they are diversifying and investing in mutual funds, Indian stocks, US stocks through their phone. Even when it comes to mutual funds, earlier mutual fund was only and only available and accessible to users who understood tech really well, and basically had bank accounts and basically had decent relationship managers. Now, with the advent of IND Money Grow and Coin and this new age platforms, one is on these platforms you buy direct funds. So the expense ratios of this direct funds is significantly lower than what earlier platforms used to sell, which used to be regular funds. That means significant amount of brokerage would go to the platform. And the other important change is now there are so many users even on our platform start investing in mutual funds. They do daily SIP, and then the daily SIP amount would be 10 rupees. So it has become very, very accessible to everyone. And plus, what our government has done, UPI, basically, like, earlier net banking and credit cards were tough to use for lots of people. But now, basically, because UPI is everywhere, almost every mobile phone user would know how to use UPI. And what all these platforms, including IND Money, what we do is our primary platform is UPI. So most of our users, they invest through UPI, and it is completely free as well. So with net banking, there used to be some charges. Most of the platforms, you would charge 5 rupees for net banking when you transfer the amount. But when it comes to UPI, it is completely free. And even for platforms like us, UPI cost is very, very less. So I think this entire industry is growing. It's benefiting people of our country significantly. One of the reason is the popularity of UPI. If we look at the other complicated part in fintech industry, so earlier you always need to visit the branch, or if that person is reasonably well off, then some account manager would come to user's place, customer's place, and then open the account. So KYC was always offline. Now, if you look at the KYC of our platforms, IND Money, and most of other platforms, it is completely AI based. AI is checking the liveliness. Through Aadhaar, we are pulling all the documents. So government has built beautiful Aadhaar platform through which KYC has become very, very easy. So now KYC can be done anytime. No need to visit the branch. No need for anyone to come to your place. So the user gets onboarded very, very fast. In a matter of seconds, he can start investing with as less as 10 rupees. Yeah. So that's the beautiful part.
Wonderful. Thank you, Sunny, for that. Absolutely, I think this is the best time for the sector and for everyone. Asish, owing to the increased regulatory focus on the CSPs and SEBI's latest mandates regarding the cloud adoption framework, how important is it for CSPs to share the responsibility with these regulated entities? What's your thought on that?
Okay, thanks, Khushbu. I want to take from what Sunny talked about in the industry, and maybe talk about a little bit on that relevance in this particular question. So that makes more sense over here. Sunny was mentioning about the way actually the financial services industry kind of changed maybe in the last 3 to 5 years, specifically after all of the UPI has come, the whole of the Aadhaar initiative has come, and maybe of course after the financial literacy has come. So that means that the financial access has been given to the kind of common man. For example, the mutual fund. I come from a mutual fund industry earlier. Mutual fund which actually everybody knows about it. Otherwise, he was talking about, right? Only the FDR was a kind of way of investment as such. That means that the regulators are also seeing that particular shift towards the other asset classes, and at the same time, the role of the technology which is playing for the entire financial ecosystem. So this has made the regulators to kind of look at, hey, I need to instead of other risk controls, which was actually regulators was focusing on, it is essential that actually, okay, I need to focus more on the technology-based risk control. So if you look at the circulars, it is starting from maybe from a 2017, 18, 20, you can see that there is a massive increase in terms of very specific micro level controls actually regulator want to put it, owing to a simple reason that actually it is going to be a systemic risk. So if you look at the mutual fund AUM in India currently stands at more than 50 lakh crores. It's a phenomenal amount. Yeah. And a systemic failure on that could lead to kind of it's a investor confidence going, it's going to be an economic disaster as such. Even for a one entity failing, it's going to be an economic disaster. So that means the regulator need to be very careful about that. And it's all of the systemic risk assets, all the people applicable for that. So that way, if you're specifically asking about the last March circular, which is SEBI has come up with, which is applicable for in-money and all, I think it has given a right direction to kind of all the entities. So it's whether it is a regulated entities like anybody market participant, or maybe somebody like us, who are actually like cloud service provider or a technology provider as such, it is applicable. It's giving a right direction out. So in that particular circular, it's talking about here, okay, it's the regulated entities are responsible, but at the same time, CSPs like us or technology provider like us cannot shy away from any of the responsibilities as such, because it's an ecosystem. We are creating an ecosystem. Yeah. Or the ecosystem is a joint responsibility for the technology provider, the financial system intermediaries, or maybe to kind of all the regulators also, entire ecosystem. We need to jointly work together to create that particular ecosystem. And there are directions it is giving by the regulator. It is a responsibility for us to ensure that we create that particular ecosystem so that the market participants could actually take that particular innovative journeys and maybe new products and stuff like that, so that overall growth happens. So it's an entire ecosystem actually creating a growth. So the role of CSPs with this particular circular, it's clearly articulated where the direction is going on. And it's a joint responsibility, what I feel, is to kind of create that particular ecosystem for the wellness of the entire industry assets. So that's my view.
Sure, absolutely. And I think we've all been seeing the penetration of the structured financial products is increasing at a steady pace. And all the players like IndMoney.com and others in the space are, seeing that kind of steady growth, right? Sunny, how the industry is coping with the demand of technology, where the consumption is increasing exponentially, both in terms of scale and scope.
One thing is, even when it comes to technology, lots of amazing innovations happen in last 1 decade that's making running applications reliably very, very easy. One of that innovation is definitely cloud, and the second is Kubernetes. Kubernetes, it's very easy to run applications reliably and maintain it very easily. While when it comes to cloud, let's say 10 years back, when people were in their own data centers, running database reliably used to be one of the biggest challenge. And lots of engineers' bandwidth would go into how will I ensure that my database is running reliably. It is, if I'm using replicas, they are consistent. And when I'm doing network transfer, we used to work very hard to ensure that we are not choking the switches, which used to be usually 100 megabits per second. So very, very slow. Now with cloud, their internal networks are more than a terabyte speed. Almost all the clouds today provide managed MySQL, PostgreSQL, Aurora, and Aurora is basically AWS specific database. So they provide managed databases and even key value stores like DynamoDB, Bigtable. So that makes running the application very, very easy. Developer, with the advent of Kubernetes and this managed services, developer just needs to focus on writing his code. Then we even have things like Docker. So with that, what happens is whatever is running in the production, developer can run the exact same thing locally. And if it's failing in production, it would fail locally for him as well. So troubleshooting, diagnostic of the issue, it can be done at much more faster speed. Yeah, I mean, technology has become very, very easy, especially when it comes to running systems at scale. And if you look at the cycle, see right now the cycle is lots of fintech companies are coming up. So you can see that the fintech as a cycle is going up. But then if you look at it at the same time, travel tech become much more mature. At one point in time, we had lots of food tech startups, lots of travel tech companies, streaming technology. In during COVID time, we saw that so many streaming options were available. Now, travel tech, food tech, streaming tech, consolidation is happening. So, and those engineers, who learned their craft or started in those companies are now leading technology in fintech companies. So I don't think we have any issue with the supply. I believe that in India we have very, very talented engineers. I still believe that issue is reverse. I think demand is still less when it comes to jobs are still less for our engineers. Basically, I don't think it's supply issue. I think it is demand issue. And 80% of our code, or probably 90% of our code nowadays, is written by GPT-4. So we leverage this, generative AI technology quite a lot. In fact, in our app, if you go through various features that we have, you would see lots and lots of features are using generative AI technology. So, like almost all the content that you see in our app, it's all powered by generative AI. And the code that's powering the entire app, most of it is also written by generative AI.
Okay.
Wonderful.
Sunny, it's happy to hear that actually it's in action now. So people talk about as a hypothesis actually, okay, generative AI will write a lot of code, but now it says that there's a code in production. It has been used in financial services. Okay, it's interesting information, Sunny.
So what we do is this GPT-4 or whatever LLM tools that we are using to generate the code, we treat them like interns. So
Okay.
like when I'm working with ChatGPT 4 to build something, I'm never treating it like an expert. I'm treating it like an intern. It continuously makes mistakes, and I'm acting like a reviewer and asking it to correct. So that ways it allows us to build whatever earlier used to take 6 months. Now, if someone is really determined, he can do it in 2 or 3 days time. With this LLM tools, the quality would be significantly higher. Why? Because to make quality of software significantly higher for any experienced engineer, it takes lots of grunt work, like really good APM integration, really good and verbose logging everywhere where it should be, really good database connection management, really good exception handling, which most of us always used to know how to do it well. But it was so much of grunt work that most of the engineers would skip handling each and every exception separately, logging it and handling it. But now all we need to do is we just need to ask GPT-4 that, hey, just handle every exception, handle this exception, this exception, this exception. When this occurs, do this. And then it's writing the code. So that's making code much more reliable. And also we are able to do it very, very fast.
Oh, interesting. Okay.
Very interesting. Very happy to hear this actually, how it's getting leveraged. And I'm sure, I think no better than Sunny can actually tell us, coming from this background of tech. So, Ashish, how do you feel about the need of an external player, to manage the end-to-end IT infra? He spoke about a lot of layers of database, and there are of course multi lines of business ranging from mutual funds to US stocks and NPS, allowing the whole fintech to solely focus on their resources and the core business. How does Tata Communication play?
Okay. So I think Sunny has answered it in indirectly. So they have excelled in one side of the story is building the right kind of products, maybe like way ahead in terms of customer experience part of their platform, and maybe an overall maybe an agility and the time maybe for a cost perspective their platforms are maybe because GPT-4 if he is using, definitely his cost of building will be significantly lower compared to the competition. The organization specifically, I will say that maybe maybe in a pure and open banking concept point of financial services producers or somebody like a distributor. Ideally, like some should focus more in terms of building that new products, build a new kind of enhance the customer journeys and improve their customer experience. That's the differentiation they have to make, and maybe like make it cost effective, like the disruption what Zerodha or Grow has done in terms of the discount rocking. Do that particular thing. The kind of the task associated with that, whether you talk about your compute, you talk about your security, your managed services, connectivity. It's a commodity assets. So now what's happening is that it's becoming more and more critical. It's commoditized, but it's more and more critical, because whatever the kind of the effort it has been done on your application layer, what Sunny and all doing, it will become futile if their underlying infrastructure is not scaling up to the demand what his team is looking forward, right? So let it be done by the expert. Take the entire like responsibility with one organization, end-to-end responsibility. So he may not have, or maybe the organization doesn't have a bandwidth, or it's not futile effort to kind of go and doing a policing if it is actually multiple partners are involved, right? So it's instead of that, it can be given to someone, and overall the ecosystem is also becoming complex. So it makes more and more sense to give it to some of the partners who has this particular expertise in an end-to-end infrastructure space. And that's something that we are talking to multiple customers also, and many of the customers are seeing the value of it. Some of the customers who has been gone much ahead of the competition, specifically in the financial service. I don't want to name that particular customer because of some restrictions as such. They could actually like focus on all these areas, specifically on the product, services and all, and leave the rest of the things to people like us. So Tata Communications also coming with that particular value proposition. So we did it on, so I handle the whole of the FinCloud, and we also, along with the FinCloud, we also have the managed services capability on it. And customers are looking at the multiple cloud environment. So there may be some of the workloads need to be part of the hyperscalers. Some of the things need to be part of on-prem. Some of the things need to be on a private hosting, MHS assets, man hosting assets. So we provide that particular manageability across the entire ecosystem. And we also, in addition to the compute itself, we also provide the security services. We also provide the connectivity. Anyway, we have the leaders for quite some time as such. So we provide that particular connectivity services and any of the collaboration platforms and everything to make this particular ecosystem to be like meet the demand of the business assets to scale as and when required. We provide that particular. That's a differentiation typically we can.
Got it. Thanks for that, Ashish. Sunny, in the context of open banking, even the financial services, producers like banks and insurance companies are entering the distribution space. So after seeing the success of course the digital aggregators with higher value customers and more financial muscle, how do you intend to handle and tackle this scenario?
So one thing is in India, from what I know, around we still have only 5 to 6 crore users who are investing directly or indirectly. By indirectly, I mean through mutual funds into stock market. If we talk about USA, that number is 98 to 97, 97 to 98%. I think there is massive growth that we will see in the next 10 to 20 years. I am very sure that in the next 10 years, this number probably would go to 60 to 70% minimum. So that means we are talking about 20x, 20 times growth. So really amazing growth potential. So that means there is space for everyone. Now, what banking companies are great with is compliance and core banking, which includes managing the ledger really well and ensuring that basically they are very compliant. Now, when it comes to fintech companies, what fintech companies are great with is one is CX, customer experience. Second is technology. Third is product development. Fourth is design, which we can say is similar to customer experience, data science, data engineering, and so on. So I don't think, so if banks needs to wants to build this really good consumer tech apps, then they need to have very strong product tech design teams. So I think it's going to be a challenge. If any bank would pull this off, then I would be very impressed.
Great. I think it's been a great conversation, Sunny and Asish. Some really good pointers. Sunny, very well spoken. Thank you for that. Any last pointers that you would like to add before we end today's chat, both Sunny and Asish? To you.
Yeah. So I would like to talk to fellow engineers who are still thinking that whether to join fintech or not. What I can tell them is this space requires a lot of innovation. If we talk about lending is actually two things. One is underwriting, whether to give loan to X user or not. If yes, how much and what interest rate. So that's underwriting. Underwriting, the way it's done right now. We are looking at very less. Most of the banks are looking at very less amount of data. But very soon we will have startups and tech companies building underwriting models, looking at massive amount of data that we have on the user. And if we crack it really well, then right now, lots of our country's people, right? Lots of our country, man and woman, they need access of money. If they get it, they will build super awesome, brilliant businesses, and our country would grow like how. So right now, the bottleneck is that underwriting algorithm. So smart data scientists, 3 or 4 or 5 team of data scientists and data engineers can definitely crack this, and they can supercharge our country. Similarly, the other part of lending is collection. Unlike what most of the people think, there also data science can play significantly important role on to whom to target, who would give the money back, and which technique would work the best with him, because there are several techniques when it comes to collection. And I'm none of this technique would include strong arming the user. There are very other smart techniques. So that's on the lending part. If we talk about stock market, we haven't scratched the surface of algorithmic trading. So the company that will make algorithmic trading accessible, completely inexpensive to everyone, available to everyone, definitely it will. I mean, then lots of our country, man and woman, would make significantly more returns, and that means, our country's wealth would grow. That's also one very big opportunity. Building a reliable trading system requires really good system architects. So that's also one very interesting and challenging problem. Yeah, if someone is looking for interesting and challenging problems, this space has all of them. There is also one very important thing called onboarding. So where we do whether this person is alive or not, liveliness check, whether is this the same guy that's there in license or PAN card. The photos can be 10, 20, 30 years apart. And like identifying this with accuracy is very hard problem. If someone would solve this with very high accuracy, then again, lots of users can get onboarded very easily. Otherwise, today, what happens is they need to go and first change their photos in Aadhaar card and PAN card to get onboarded. So lots of very interesting and challenging problems. So if, to my fellow engineers, smart fellow engineers, definitely this is the industry that you should consider.
Awesome. Thank you, Sunny, for that. Ashish, any last comments from your side?
Okay, Khushbu. So take clues from what Sunny was mentioning. So we are also very kind of bullish about the way the financial services industry, specifically Indian financial services industry, is going to grow, and we expect that exponential growth. It may not be restricted to one segment itself. All segment like your capital markets or in the lending space, or maybe to kind of further maybe on the risk side and everything. So maybe what Sunny was mentioning, it's an under-penetrated market, right? There is a lot of white space available, room to grow, and accordingly, the technology consumption, the complexity associated with for the entire industry is going to be go exponentially high. So people like us actually seeing that particular as an opportunity, and we are actually equipped to kind of handle that particular thing. So we are building the capabilities around that. So we see kind of thing, look for the industry participants to kind of, rather than maybe like a specific services point of view, we would like to have a more and more strategic partnership with entities on that, so that we can work together for that particular growth journey. So that's from our side.
Great, great. Thank you so much, Ashish. Wonderful interaction, both. Thank you so much once again for joining on CIO News. And as I know.